In today's video, we'll be taking a look at my Webull portfolio from 2020 all the way until 2025. I'll be revealing my full stats, my P&L, and percentage gains on this account. I'll also reveal exactly how I produce these trading returns, and I'll be going over the key things that I trade, things like gold, the NASDAQ, etc., in today's video. Now quickly, a disclaimer on this. This is not my only trading account. I do have other portfolios, but because this is the internet, I don't want to show every detail about my finances. This portfolio has been public from the beginning. You can go back to my channel in 2020 and watch when this account was first created, and I highly encourage you to do that. So 2020 till now, let's get into the stats. So a bit of a disclaimer on this before we jump into the stats is that I have actually been trading this portfolio from 2020 until 2025 publicly on my account, but this is not my only trading account, and this is also not my only source of income. I do want to be transparent about this. I make money selling software, and that is part of the reason. I also run a software business, and that is a large component of my income as well. And so for the sake of transparency, I do also want to show you on my videos that I do actually trade, that I have real results that are verified on a US regulated brokerage. I believe it's really important for content creators in the trading space to show some kind of proof of concept that they actually have verified trading results to back all the stuff they talk about. And in my case as well, because I run a business, I also find it to be a useful thing when offering our services that we can back true, real trading experience with results. Let's jump into some stats. Okay, so I'm on my Webull portfolio, and I'm going to quickly just log in just to show you that I am on an interactive, live platform. This is Webull is a US regulated brokerage, and in this P&L window, you can see all sorts of different stats about my personal trading results. So we're going to go through a little bit of everything. I'll show you first the overall performance here, and then we'll go month to month and year by year all the way back to 2020, and I'll show you some of the ups and downs of this portfolio. So you can see right now I've selected the 1 month time frame, but I can go back 5 days, 1 month, 3 months, 6 months, year to date, 1 year, and the all-time returns on this trading account are 215.63%. or $359,000 on this account. So this number right here is obviously the amount of money the account has generated in terms of overall profits. Those are realized and unrealized profits. And if we take a look at the cumulative P&L in a percentage form, we're up about 215% in the last 5 years. Now, for some traders, this might be an exceptional return, and for others, this might be a quite poor performance. But let's first of all just compare this to the S&P 500 during the same period. So I've pulled up the S&P 500, ticker symbol VOO, to track the performance of the S&P 500 since the creation of my trading account back in 2020. And you can see I have this vertical line to represent when the Webull account was created. And then what you can see here is that this horizontal line represents the first day that I had the account. The returns since then, going from this period of time until now, what we can see is that the S&P 500 in a passive return generated 141%. Now, a couple things to think about this. First of all, this period in time for the S&P 500 is a phenomenal sample size to look at. 141% in 5 years is really, really good for the S&P 500. In fact, that's usually not really what you can expect to get from the S&P 500, because usually you also have, down periods, side periods, down years, etc. But really, we have had mostly an up market. Now, you had a pretty nasty correction in 2022, but outside of that couple year period, the S&P 500 has had some remarkable returns. So benchmarking against the S&P 500 in the last few years has been a quite difficult thing to beat. Now back to this chart, you can see that again, my 215% versus the 140% generated passively by the S&P 500, to me, is something I'm very proud of. I know that there are other traders out there who may, not be super impressed with this number, but I focus on this account on relatively slow and steady approaches in the market. I trade this account very actively. And while I know a lot of social media content creators will tell you that you should be making 10, 15, 20% per month, no one really is able to back those sorts of claims over the long term by logging in and showing a brokerage account. So to me, relative to what I see out there, this is actually quite a good return, especially when I'm not taking massive risk in this account to generate these types of returns. So I'd say over the long term, I am handily outperforming the S&P 500 in this account, and I'm pretty happy with those returns. Again, if you compound that sort of outperformance over the next 10, 15, 20, 30 years, it would lead to massive wealth generation. direction. And for me, that is the goal with my trading, is over time, continue to compound and scale up what I've been doing for the last, almost 10 years into the future. Next up, we can take a look at the calendar view and view month to month how this portfolio has performed. And I'm going to be going back all the way till 2020. So let's jump into, first of all, how this year so far is going. You can see that in January, I produced a 5% return. In February, I lost about 4%. And in March, I'm up about 3% at the time of recording this video. Now, if we go back to, so overall, this is a pretty good start to the year. I mean, not a great one, not a terrible one. I'm up somewhere around 3% or so overall this year. And so we'll take that. If we go back to 2024 was a really good trading year for me. I was very, very consistent. I had a couple down months, but for the most part, most of the months were positive. And I had some really big up months like November. I was up $42,000 in this account. And then, of course, sometimes giving back some of those gains, 24,000, 7,000 down in August and September, and then had about a modest or a slight modest loss in December. Now, the percentages calculated here are a little bit sometimes confusing. And they do use a certain weighting within Webull, but I generally look at this mostly based on the dollar amount because the percentages are, again, calculated based on very specific criteria within Webull. That's why, in a weird way, you're seeing 0.02% gained, but we lost 6.91K. I'm not really sure how, again, Webull's calculation works on this. And like I said, I generally am favoring just looking at the overall account P&L, which has a very specific criteria. You can pause the video if you want to read about how that calculation works. So again, 2024 was a pretty good trading year for me. The first 6 months I took, well, actually first 7 months, I really took no overall monthly drawdowns. And then we entered into a drawdown in August, which deepened in September, came out of that handily in October and November, and just gave slight back in December. Going on to 2023, this was also an exceptional trading year for me. I had a pretty good drawdown. This was my last, I remember this drawdown pretty well. This was a pretty ugly drawdown here during this time, August, September, and October. I was very bullish on the NASDAQ, but very early to the idea. That ended up working out later when I was able to catch some fresh buys on a breakout during the lows of that 2023 pullback, and ended up generating a very nice profit, but I had to go through some mud to get to the other side of that drawdown. So that's trading 101. But anyways, I had, again, like I said, overall a very good year in 2023 and 2024. So now we'll take a look at 2022, which was one of my toughest trading years since becoming a profitable trader. During this time, the markets were very volatile. We had an inflation problem going on all over the world, and things like gold, the stock market, etc., were all dropping. And if you know my channel well, you know I generally lean bullish on gold and on stocks. And I'm not a perma bull per se. There are times where I get more cautious or bearish, but in this year particularly, inflation really surprised a lot of us, and definitely myself, where inflation kept rising and rising and rising, and I was on the wrong side of that trade. Inflation kept, really upbeat, doing expectations, and that caused major slides in the stock market and gold, which I was on the wrong side of both of those trades. So what was happening a lot during this time was I was looking for breakouts, looking for reversals, because fundamentally I thought stocks and gold would go higher. And while I was right on the direction overall that I thought, stocks would rebound, I was right about that going into 23 and 24, but I was very early to the idea. And that is one of the biggest challenges with fundamentals, is fundamentals can help you pick the overall bigger picture direction, but timing wise can still be tricky. And my timing during this time was kind of floppy because, again, I had some breakout ideas and I was looking for trend following movements to the upside. But if you know 2022's price action very well, it was really a lot of fake outs. I'll show you what I mean. So it's the day after I recorded everything, and it just so happens that my account had one of its best trading days in the last few months. And I just wanted to give an updated view of the performance so far. You can actually see the account is now up 221.64% in all-time gains. And on the calendar view here, you can see that the March return is now about 5%. So we had a nice little jump up there. Just wanted to include it in the video, as that is the latest up-to-date report on the performance in the account. So here's the NASDAQ in 2022 with a simple trend filter for the A1 momentum indicator. What you'll see here is that there was just these several really strong downward pushes. And if you know me well, you know I don't love to short indices. It's a very difficult thing to do with my trailing stop trading strategy or my approach to managing positions via trailing stops, because you get these very violent upward moves. So several times in 2022, I got caught on the wrong side of these breakouts. Basically, there would be this kind of big move and I'd look for the pullback to get involved, and that pullback would just turn into a bigger meltdown in the stock market again. So I took that trade over and over, and unfortunately it did not work many times in a row. Now you might say, well, then why did you do it? Clearly you shouldn't have been doing it. Well, to be fair and to push back on that, as we entered into 2023, those same entries, which were really kicking my butt and just going through the drawdown in 2022, ended up being exceptional opportunities, and that strategy thrived in 2023 and 2024. So, you know, here's the big takeaway from the 2022 drawdown that I went through. Although this period really stinks, a common trading mistake that people will make is they don't want to experience drawdown. They're so afraid of a drawdown occurring that they will change everything to avoid this sort of scenario. But thank goodness I did not change my trading strategy, even though I went through a drawdown in 2022, because it would have massively costed me in the years to come after that, where that same strategy that worked horribly in 2022 flipped around and was, you know, amazing in 2023 and 2024. So I just want to point out that, again, although 2022 stinks, I do want to point out that I would not change a whole lot of things if I were to do 2022 over again. Sure, those entries hurt and they stung, and I kept trying to get breakouts and they weren't working. But when it stopped not working and I was able to start capturing those great opportunities again, it paid me back way more than all the losses combined. Many traders are not aware that even good trading strategies and profitable traders can have negative months, quarters, and even years. 2021 was an exceptional year here as well. Percentage gains were really big. And I do also want to clarify that during 2022, I added more trading capital. 2023, I also added more trading capital to this account. And since then, I haven't really added too much more than that. But this account has been built up over time, both by trading results, compounding my gains, but also adding to the account. I believe it's really important to have multiple sources of income and find new ways to constructively add more capital to your trading account as frequently as you possibly can, as long as your income exceeds your expenses. 2020 was one of my best percentage gaining trading years ever. In 2020, the market absolutely got terrified of what was happening with the COVID pandemic. And one day the Fed comes out and they start just saying, we are going to print like a monster. That's basically what I heard. And so during that time, I made a career trade for me, which is I went long a lot of individual stocks, I traded the NASDAQ quite heavily, the S&P 500. I was even using a little bit of leverage. At this time, I was much more aggressive in this trading account. And that ended up being a massive return for this account in 2020 on a percentage basis. Was I made the notorious Tesla long position in towards the lows of 2020. These were career plays for me. I wish I had more trades like those, but those were massive trades, and I was very correct in basically calling the paper over situation that happened in 2020. What I mean by that paper over is that the Fed came in and we had a relatively decent economy going into 2020, but the Fed came in and just said we're gonna just pump money into the system to save the day. And they had the luxury of a decent economy before that in order to do that. So I made a really good leveraged but calculated risk on the S&P 500, on the NASDAQ, and on individual stocks that I liked, like Tesla, and I went long a whole bunch of stuff, and that ended up being one of my best, to this day, the best percentage gains that I've ever made were in the 2020 rebound breakout trades that occurred after the major crash that happened early in the year. So the main goals with this portfolio overall are to outperform the S&P 500, which I have been able to do in the last 5 years by a pretty wide margin. I'm also interested in this account in keeping a relatively moderate risk level. I'm not looking to go incredibly aggressive, and I'm not completely conservative or, super low risk on this account either. But I think it's important when you are defining your own trading strategy and your own kind of risk tolerance that you categorize yourself as high risk, moderate, or low risk. Many times traders don't even realize that what they are doing is categorically more high risk when they think they're being low risk or moderate. So I would encourage you to look at your own drawdowns, look at your own periods of time where, things have gone well for you or gone wrong for you. And if your account is doubling and tripling in good times, you're likely taking massive risk and you may not even realize it because it's very difficult to double an account. You can see that I've been able to, over the course of 5 years, create about 216% returns. Now, those are results that are achievable to me. I know that there are traders who are better than me out there who can potentially do more returns, but for me, I'm not interested in chasing peak returns. I'm way more focused on limiting my drawdowns. And in my personal opinion, that's the way to do it. If you want to stick around long-term in the trading game, you need to focus on your drawdowns, not focus on your returns. So now that we've gone over the returns, let me show you a little bit of how I am generating these trading returns. Starting with the technical analysis side of my trading approach, you may be surprised to find that it is an incredibly simple approach that I use. I am not super fancy with technicals. In fact, technical analysis probably plays 15 to 20% of a role overall in generating the returns that I make. What I mean by that is that I think technical analysis, and this is not a popular opinion, I think it's one of the most overrated and overestimated things that traders focus on. I actually think there's way more important stuff like risk management and fundamental analysis and trading psychology that play a huge role in trading results. I know you don't really love to hear that when you're trying to learn this stuff because everybody kind of wants that technical entry pattern that's going to make them rich. Trust me, I've been there and I've wanted that too. But really on the other side of things, as I've become, profitable overall and generated returns year over year like this, what I can tell you is that technical analysis, entry fascinations, are way overhyped compared to understanding fundamental analysis and risk management. We'll talk about that in a second. But with that said, the technical side of things that I am looking for are the simplest stuff you see in textbooks everywhere for technical analysis. I'm looking for simple breaks and retests. I'm looking for market structure. I'm looking for trends, things like that. So this chart I would consider to be in an uptrend. I focus mostly, guys, on the 4-hour and the daily chart. Those are the time frames that I really love. Specifically, my favorite time frame is definitely the daily chart. And I'm looking for key levels of support and resistance within the context of an overall trend. Now, you saw my filter earlier. I love to have a simple trend filter on my charts just to give me an idea of market direction, market flow. I'm a big fan of going with the trend with this trading account, but I do actually have 2 technical strategies that I use in this account. So I am trading momentum plus fundamentals, and I'm also doing a mean reversion style of trading, which I'll talk about in a second. But for the momentum side of things, basically what I'm looking for is charts that are putting in higher lows, higher highs, adhering to market structure, and buying at support levels or selling at resistance levels. Now, on the other side, that's your entry approach, right? For the exit approach, what I like to do is I like to trail stops. So I'll give you an example of how a trade might take place. Let's just say, for example, that I took this long trade. Let's say that I had a fundamental reasoning for doing so, and I went long the NASDAQ, so here's my buy. And let's say that it was after this candle right here, so I waited for some sort of wick rejection, and then I put a stop loss just below this level. What I would be looking, this is my stop loss now, what I would now be looking for would be breakouts through key structures of resistance like the previous highs and looking to trail stops behind consolidation zones or higher lows. So during this period of time, you had a consolidation that ultimately broke out higher. What I would then do is take this stop loss and actually move it into profit and lock something more into the trade. Now, why do that? Well, because I don't use a strict take profit. What I use is a trailing stop. If you'd like to find out more information about how I trail a stop, I'll leave a link and pinned card in the top right of the screen to where you can find my full trading approach with a trailing stop. But what this allows me to do is ultimately ride trends for a maximum amount of potential gains. And when they finally reverse, cut the loss or cut the trade, take profits and move on. So what that ends up doing for my trading results is I have a lot of small losers, I have a couple small winners, and the occasional, kind of rare, huge, outsized, massive winner. That is why when you look at my P&L, there are periods of times where I'm just up like a massive amount of money in one single month. It's because I have one trade that just runs like crazy and I trail stops over and over and over and ultimately take a huge profit. And when I'm going through drawdowns, it's because things are more choppy and indecisive, like in 2022, where things were starting to go and then pulled back, stopping me out for either a loss or a small win. So that is why, as a trend follower, I have kind of that, huge wins sometimes and then small wins or even negative months other times. On the mean reversion side of things, I trade stocks. So I actually have quite a few stock positions open right now because as the market has been, at the time of recording this, dropping, I've been starting to do some options trading, some selling puts. Let me actually move my screen. So you can see I've actually accumulated a lot of different stock shares here recently as the market has dropped pretty aggressively. I also have, for example, like IGV, I trade ETFs. So I trade a little bit of everything in this portfolio. You can see this is a longer term swing trade that I have on long at the retest of this support level. So again, very simple example of an entry that I have here on IGV, which is a tech software ETF. Now, the next core thing that I use to find my trades is the Edge Finder. Now, this is a little bit of a, I know, tongue-in-cheek, well, of course you use it, you sell it. But genuinely, this software tool that we've built here at A1 Trading helps traders to identify opportunities that marry up the sentiment analysis of the market that's tracking institutional money flows, retail money flows to contrarian trade. We also have technical reads like the overall momentum and seasonality readings for each asset. And of course, economic data like your CPIs and your NFP reports and your GDP numbers. So we're looking at economic data, we're looking at technical data, and we're looking at sentiment data. If you'd like to check out a full resource on how my trading strategy works start to finish, I'll leave a link in the description in the top right hand of the screen where you can find my full trading strategy revealed. The high level way I use the Edge Finder is essentially what I do is I filter for readings that are bullish or bearish, and then I go look for technical charts that marry up nicely, and then I'm looking to take calculated risk on them. So for example, this gold very bullish reading right now, actually, I just took a nice trade on the gold market here recently. So I'm looking for, if I were to take another trade, I'd be looking for a pullback in context and in agreement with the overall readings that the Edge Finder are generating. Again, this takes into account economic data, technicals, and sentiment to give me high conviction trading ideas. I find it really important to track what institutional data is doing as well as what crowd sentiment is looking like. And again, that factors into the score of the Edge Finder. If you'd like to find out more information about the Edge Finder, you can find all the information on it in the description down below this video. The other thing I will also plug while I'm at it is you can join the VIP group if you'd like to see every trade that I'm taking in real time. I send notifications through our Discord to people to see every trade that I'm taking, but more importantly, why I'm taking the trades. So here you can see, for example, my gold trade that I mentioned. Anytime I take a position, the full context and breakdown behind why the trade was taken is shared with our members. If that's something that you're interested in, again, this is a signal service backed by valid, real trading results, which I think is really important and why I do these videos in the first place from a business perspective. I hope this video also helped you to think a little bit more about your own trading approach, your strategies, etc. But maybe more importantly, what realistic trading returns can look like. I've been doing this since really like 2016, 2015 era. So I've been doing this for a long time. But at this point in my trading career, I do think that it is really, really important to focus on those core principles that we discussed in this video. Understanding that drawdowns happen. Understand that risk management is really important because it keeps you in the game when bad periods happen. And when it comes to maximizing trading returns, knowing that we don't want to leverage up or be silly with our leverage when things are going well, because we know at some point a losing streak is around the corner. It's inevitable and it's part of the trading game. Thanks for watching, and I hope you enjoyed. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.